What's going on YouTube, TikTok, Instagram? This is YB, and today we're going to talk about your net worth and how does it compare to everyone else. We're going to give you the median versus the average and how you bench up or compare to your peers. Now, your peer group benchmark depends heavily on whether you measure by the median or the average. According to the official Federal Reserve or of consumer finance date, the average net worth is significantly higher than the median because the ultra wealthy heavily skew the average upward. Now, let's talk about the breakdown and below the outline how you compare using both metric alongside standard rules of thumb and multiple based on your salary. Now, let's talk about compare by the number median versus the average. What is median net worth? So the absolute middle point, half of the household in this age bracket have more and half has less. This is the most realistic, typical American benchmark. And then let's talk about average net worth. Total wealth divided by the number of household. This number is highly inflated due to top tier earners. Now, we're going to talk about the age of 30, 40s, and 50 and what you should do in each bracket. But let's talk about age group 30. What is the median net worth for the age group of 30s? And it's a whopping 135,600 with the average net worth of 549,600. So I'm in this bracket and I know my number is skewing the average because I am in the million, roughly around 1.5, 2 million net worth. And how do I figure that out? Is well, I count my real estate, my business, my assets, minus my liability, and I'm somewhere around 1.5 million, I believe. Now, let's talk about the age 40. Age 40 is for median net worth is 247,200 with the average net worth of 975,800. Now, this is off of consumer finance, the data they show, so this is what they're saying. And the age group 50 is the median net worth is 364,500 with the average net worth of $1.5 million. Now, let's talk about what you should be doing in each age bracket. Now, tracking your progress using salary multiplier while comparing yourself to national data provides broad picture. Financial planners often recommend using income-based benchmark. These multipliers help ensure your net worth scale appropriately to support your actual lifestyle. At the end of the day, these numbers are just numbers. And it just helps to compare with it. But at the end of the day, you have to figure out how you're going to settle out or retire based on what you actually earn. So let's talk about your 30s and what you should be doing in your 30s comparing to others. So in your 30s, this is where you establish your foundation. The target multiplier aim for your net worth equal to 1 or 2 times your annual salary by age 35. So if you're making $50,000, you should have a median net worth of $100,000, and that is the reality of it. Now, the reason why I use $50,000 because that is what the national salary is or average salary. So this is what we're using. So what's happening in this decade? So this decade is characterized by a raise of career earning alongside massive liability like purchasing a home, expanding mortgage, and raising a child. In your 30s, this is where your foundation, where you start building a family. So everything is starting to work against you. So it's going to be hard to build net worth. So that's why I say in your 20s, that's where you should be leveraging that time and throwing all your money into investments. Because by the time you turn 30, that is when you're realistically going to start having a family. Realistically start buying a house, and realistically starting to get good pay raises at your job. Now, the key leverage in this one is focus on building employee match retirement account and keeping consumer debt to the minimum. So you're building your foundation, and this is where you have to take advantage of employee match. That's free money. And the other thing is when you're raising your kids, you're buying cars, you're getting yourself situated for the future, minimizing your debt. So let's talk about in your 40s now. What is this phase? It's the accelerating wealth building. So your target multiplier for this network equals to 2 to 4 times your current annual salary. So what happens in your 40s? So household in your 40s typically holds the largest overall amount of debt, primarily driven by home mortgage. However, home equity also starts growing rapidly during this phase. So here's the thing. In your 40s is whenever you actually have your house, and that is probably your biggest debt. So this is where the you had to learn where the key leverage point is for you. You shift focus towards aggressive compound growth and tax advantage stock market investment, avoiding the temptation of lifestyle creep as your income peaks. Yes, in the 40s, your income should be peaking at the time. So this is where you take advantage of it. And the last part, in your 50s, the final retirement sprint. This is your final part. We still have enough time to build up your retirement fund. And this is where you sprint to build up your net worth. And the target multiplier at this age is aiming for a net worth equal to 4 to 8 times your annual salary. So what's happening in this? This is your peak earning years. The window of your financial stretch before retirement. The window letting you compound interest through the heavy lift being begins to narrow. So the key leverage in this age is IRS catch-up contributions for 401k and the IRA account. Focus heavy on debt reduction and specific aim to enter retirement and fully pay off your mortgage and minimize the required monthly cash flow. And that's what you should do by each age group. Now, if you don't know how to calculate your personal net worth, this is what you have to do. Your net worth is equal to the total asset minus your liability. So your asset, what does that include? Current bank account balance, brokerages, and retirement accounts like 401k IRA, and the current market value of home and your vehicle value. Minus your liability. What is your liability? The remaining mortgage balance, student loans, car personal loans, and outstanding credit card debt, and if you still have student loan. So this, if you would like to map a specific strategy to hit these milestones, let me know your current age, your annual income, and your target retirement age. I can help you calculate your personal wealth accumulation for your path. Comment down below, like and subscribe, and that's all I got for you.